Nicolaj Højer Nielsen, and together with PreSeed Ventures, I welcome you to this Academy talk about fundraising. We have approximately 1 hour together, and I'll just go right to it. I'll start with a 5 to 10 minute, you can say, introduction to the topic and introduction to tonight's agenda. My background from doing that is that I mainly see myself as an entrepreneur and a business angel. So I would take, you can say, the business angel perspective on funding. After that, we have 15 minutes together with Anders Kjær, who is investment director from PreSeed Ventures. He will give some insights on how an early stage seed fund like PreSeed evaluate the deals and the process from getting from a contact to an investment. And last but not least, we have Stine Mølgaard, who is the founder CEO of Radiobotics, who will share insights from their funding journey, which have involved multiple different sources of both, you can say, hard funding and soft funding. Finally, after the three of us have talked, we have a live Q&A session for the last 20 minutes. And for that to be successful, you will have to enter your questions in the Q&A. So basically, at the bottom of the screen, you can see the Q&A part. If you press that, you can enter whatever question you might have to either Anders, Stine, or myself. You can also upvote other questions. So after Stine's talk, we have the 20-minute Q&A. And here is the full agenda. As I said, I'll do the introduction from a BA perspective. Anders will talk about it from an early stage VC perspective. Stine will talk about it from a founder perspective, and then we'll have the Q&A. And now to something that I feel is really hard, and that is to explain startup funding in less than 5 minutes, but I'll try to give it a shot anyways. I think the first thing you have to have in mind when you talk about startup funding is the phase you're in. Because one of the problems is that you look into the news and see this big startup or scale up raising 10 million euro from an international VC fund, and then you think, oh my God, that is something for me. Or you think, oh my God, you got X million in loan-based funding from Silicon Valley Bank, and you think that's something for you. Well, that is something for you if you're in that phase. So basically what I try to simplify on this slide is a simplistic view of the different phases in a startup. From an idea concept to, in the end, hopefully when you're growing, when you're large and profitable. And my point with this slide is that if you're in the early stages of the startup life, which I know that many of you are, it's a limited number of funding sources that are there. Well, you can say it starts with yourself. It's about friends and family. It's about public support, aka soft funding. You can get a little bit from accelerators, but they're more providing mentorship. Then you have business angels from myself. You have VCs coming in. Early days in the clean tech biotech. If you are in IT, normally a little bit later. It could also be crowdfunding. Today, we'll focus on some of the usual suspects here, and that is my perspective, the angels, and also Anders' perspective from the VCs. Just have in mind that public support is also a huge part of early stage funding. So how do you get early stage funding? Well, I think there's a major difference in not only the sources, but also how to get it. If you take one of the huge startups, that could be in the Danish scene, that could be a startup which PreSeed has also invested in, Trustpilot. If you ask the CFO or the CEO of Trustpilot about average basket size, customer acquisition cost, churn, growth in different markets, competitive pricing, all that, they have all this data. So when you invest in late stage, basically you get a huge spreadsheet with all these data. So you can base your decision on that. When I invest as an early stage business angel, or others invest as an early stage VC, we typically don't have this data. You're most likely not even on the market yet. If you're on the market, you maybe have a little bit of users or a little bit of revenue, but you haven't proven it yet. So what can we trust? I think a big part of that is you trust the founders behind, because you simply don't have the data to do it. It's not like you shouldn't try to generate as much data about the market, but I can just speak for myself. A big part about getting a business angel is getting this personal trust. And what does that mean for you? That means that most early stage funding is local. Because when it's about personal trust, it's about being able to talk to you. It's about to check you out. So I might meet you virtually and think you're fantastic persons, and I might want to invest in you. In these Corona times, this might even happen virtually. Great. Now I want someone else's opinion about you. Are you really as cool or smart as I think you are? If you're in Denmark, I can go to LinkedIn and I can always find someone who knows you. I can call them and ask, how are you? How's Peter? How's Hannah? If you are in Stockholm, my network is so slim, I can't do it. If you're in Berlin, I can't do it. And one of the times I see where people misunderstand this all the time is hopeful startup founders going to Silicon Valley, meet all the VCs at Sand Hill Road. Great, they want to talk to you because you're interesting persons. What is the chance they will invest in you if you're an early stage startup? 0. Well, you can get funding if you base your company there. They're not investing in an early stage startup from Denmark. My short point, that is that early stage startup is mainly local. You can say there are 3 main types here: friends and family and fools, who typically invest because they know you, not because they know the industry. Small amounts. Later on, you have VC funds, and the early part of that is called seed funds, like Anders represent, much more skilled, bigger tickets. And in the middle, you have this fluffy term called business angel, which is basically just a term describing that we're investing our own money, and our main motivation for investing is not in you, but in the business. With this very brief introduction to startup funding, I will give the word to Anders, who will talk about how they look at deals at the PreSeed Ventures. So welcome, Anders.
Thank you, Nicolaj. I'll just share my screen. Can you see it?
Yes, we can.
Yes, you can. Well, thank you, Nicolaj, and great to have you and also you, Stine, here today. And good evening, everybody out there. It's actually quite funny this setup where you can see me, but I can't see you. So I guess I need to get a grab of myself here and perform so I can satisfy you these next 15 minutes. It'll be 15 minutes where the agenda will be like this. It's going to be a brief intro to PreSeed Ventures. It's going to be how you nail the team and traction. We've tried to say let's not go abroad and focus on everything. Let's try and talk a little bit specific on 2 very important elements: team and traction. And then briefly in the end, I'll also just comment a bit about our investment process. Please note all the questions you might have and ask them in the Q&A later on, because there could be, as Nicolaj said, even though I have 15 minutes and he had 5, I don't think 15 minutes is sufficient enough either to comment on everything. So starting off with just a very brief intro to PreSeed Ventures. We believe we are, together with all our alumni founders, we are a powerhouse of experts. We both have a management team, an investment team, and operation and fund support. We've been around for more than 15 years, where we've been able and lucky enough to be part of more than 400 journeys, so 400 different companies, with at least as many founders. So we do have access to a lot of knowledge about how to go from an early stage tech journey and hopefully to a later stage. Our position in the market, maybe just following up on what Nicolaj said. So we believe we are early stage, and we define it more specifically in the pre-seed seed stage. We also have invested in ideas before, but I'd say that's more an opportunistic thing. As you can see here, there are many opportunities before VC funding, and with us typically being the first institutional VC, there are also plenty of opportunities afterwards if you are both lucky, good enough, and hardworking to go to that stage. As I said, we've been part of many journeys, and maybe some of you out there will be one of the next. Who knows? Some of the logos here represent some of the amazing companies that we are part of right now, and very active in. Some less active because they've come to a very later stage where we are only a minority shareholder. Very briefly, you can see on the left side here some of the key metrics for the past 15 years, what we've been doing. As I said, 400 companies and at least as many founders. Quite a lump sum of money been invested, and that's from ourselves, but also from syndicating investors like Nicolaj as a business angel, or other VCs, local or regionally, internationally. And we do see many startups, and that's a little bit of the experience that I'll try and talk about today as well. And actually just jumping into it, starting with what's the focus of today from my side. A key comment here is that there are 4 elements that you should really need to focus on when you want to build a startup. It's people, it's product, sales, and of course money. What we'll focus on today, to be a little bit more specific, instead of just touching very briefly on all 4 of them, we will focus on the people side, so the team, and on the traction, could be sales. If we talk about teams, I don't think I don't have it in any report, but I'm pretty sure from talking to all the syndicating investors we have, being it business angels, investors, VC, private equity, team is the #1 most important thing when you look and assess startups. And startups, not only early stage, also later stage. Teams are very important. And as Nicolaj said, maybe when you mature as a company, data will be even more paramount, but still the skill and competencies in the team is unique. So some of the learnings that we've seen the past 15 years in all the companies and founders that we've been supporting and trying to support in that journey are some of the following. When you come to us, we would like to see that you believe in the team element. So it's us instead of me. It's believing that diversity in the skill set and the competencies will create a more high-performing team than just a solo founder or me or us, very similar to each one another. And I'll come back to an example on that a little bit later, actually. Then it's actually prioritizing an A team as a lineup. So from the beginning, from the get-go, when you decide I want to do a startup, then it's actually being very ambitious on the team side as a lineup. Don't think that, well, we'll just start in the small and then we'll get it later on. We very much appreciate and look into teams that take that as a first starting point. So instead of focusing on keeping the company to yourself and trying to get as fast as possible on your own hand, I think you as a company and as a founder, maybe the main founder, you will have a higher degree of success if you focus on team and not just a team, but the A team. Sure, you can attract higher better than yourself. And that's actually also to allude to that you can't do it everything. You can't do it all. Even Elon Musk, he might be a little bit of a special person, but he's even a character, right? Or Jeff Bezos, they know they can't do everything themselves, so they hire people, if not as good as themselves, hopefully better actually. And that doesn't only go for the core team itself. It would also be, for example, if you want to attract advisors or board members, because that will help you on your journey. Be clear on roles and responsibilities. When you come to us, don't say we are 4 partners in crime and we take all decisions together. We want to, we don't want to say that one person is CEO, one person is CMO, and somebody is left out. But having clear roles and responsibilities just shows that you know how to structure your business and how to move forward. Because what's for sure is not only when you take an investment from VCs like us or an investment like Nicolaj, when you start the startup journey, really hit the speed, then for sure there will be a lot of decisions to make, and it's just more easy if you have clear roles and responsibilities. Then we would encourage you to show that you bring in external advice, because especially in the early stage, you don't have many resources. So maybe what you cannot hire in your company, you can track on the side. It could be strategic expertise, it could be domain expertise, or so forth. Also, very important thing here, consider whether you have what you can call a product or problem founder fit. There's a key term called product market fit, which goes very often around and being mentioned a lot of times, but maybe boiling it down to also at this stage, try to see what we would like to see and hear is that the problem you want to challenge or find a solution to is something that you have experienced yourself or that you know a lot about because maybe your partner or somebody else have experienced it. It could also be that you've worked in a field for many, many years and in that way being more or less an expert. So that product founder fit is something we really take serious. And the list could go on and on. Trying to come with 2 examples to illustrate this, also thinking of the sake of time. I've come up with one good example, I think, myself, and then one very bad. And I know you can't talk bad about other people, so the bad example is about myself, so I'll come back to that in a minute. The good example could be Podimo. If you don't know Podimo, that's the Danish serial entrepreneur Morten Strunge, who launched Podimo, I think maybe 1.5 years ago, maybe maximum 2, not more than that. And actually what was clear from the beginning when he started Podimo was that he had done some, you could say, very well considered lineup, the 18 from the beginning. He has also publicly commented on that it was very important for him if he wanted to start what he believes could become a huge company, then he only wanted to do it if he had the right fundament in place. And that came from speaking of learning from his previous experience. So if you look on this list here, you will see it's a diverse skill of people, both from domain knowledge, from function knowledge. Also you have both genders represented, but also I'm pretty sure very different personalities. And that just has a very higher likelihood of success than if you don't. And fast forwarding from when Morten and his team started out less than 2 years ago in a basement, today they've already completed 2 funding rounds, and I believe they would be on a way for success. Then the bad example, that's myself. I did it when I was just finished out of Aarhus University, and I had my first job at Novo Nordisk. And I had, just before I ended my studies, I hooked up with 4 people I knew. What was the case here was none of us went full-time, we were part-time. Some of us were students, so we had that to take care of ourselves. It was also 5 very, very similar educations. So the backgrounds we had was, we couldn't complement each other as anything. We probably would see the world in the same way. And our personalities, as the suits here would show, were also the same. And it flunked big time. It never went. So just to say, team is very, very important for us. And there are very many different things you can do to actually hit that, nail it. Traction, next thing. You can never have too much traction, actually, even though it's early stage. Think that, okay, you can have one mindset saying, how can I just get enough traction to get A funding? But just tip it around and say, now I really want to show that I can take this very far. And then when I can't do it with us as a team, ourselves more, we need funding, then I believe you would have a higher success on attracting some funding, be it a business angel, be it a VC or whatever. So don't think in limiting yourself, just getting to that revenue or getting to that number of customers, which you were told by some investor. No, get as much traction as you can. And as I say here, performance beats biases and perceptions. So even though you might not be a serial entrepreneur, if you just crack it with traction, you can shut the mouth on people who are critical. Commercial traction are more than just explosive revenue or customer growth. At an early stage, it's just as much about learnings. So remember not only to focus on communicate that you have a certain number of customers, certain number of users, certain number of revenue, but also maybe communicate what you've learned so far. Because what we do as investors, and that doesn't stop with us, that continues with all the continued investors, that is de-risking our investment. So showing that you have done some learnings and that you will not do the same mistakes again, de-risks an investment. Then know your metrics. There are a lot of metrics, and I'll show a slide later, but depending on your both what kind of business model you have, what kind of company you have, know the metrics for your company. Also identify your KPIs. You can have a lot of KPIs, so a lot of goals, targets, many names for the same. But try and identify the most important KPIs for what will make you a success in the next short period of time. Then have a plan. You can always make a plan, but try and make it so it's not only making it granular, it's also make it relevant and maybe more than just a desktop research. So you can do this in many ways. You can talk to customers, you can talk to users, you can address the problem with, if you don't have experience yourself, but only from a domain perspective, then maybe try and go to talk to people who have. Also considering a business model instead of just ripping off what is, you know, a classic subscription model. Try and understand how will a business model in your case look like. If you can illustrate it, you can. If you cannot illustrate it, you cannot explain it. So try also always to see how you can illustrate things, because if you can illustrate it and illustrate it to others, then you can also easily explain it. An explanation is what is, an argumentation is what will build the trust that Nicolaj also talked about before. Then at this point, it's also understand the term product market fit, and then maybe more granular the product customer fit, because what we don't expect is that you know how to scale your company profitable wise, because you're not there yet. Maybe you don't even have customers, maybe you don't even have revenue, but try and understand how your product really nails that problem from your customer, being an end user or a corporate customer. Then show that you understand the funding journey, the plan of your company. Because when you go out on a venture journey, for sure is that you will need more money than just the upcoming round that you are looking financing for. So try and think a little bit ahead of that. And there could be many more links. If you look at the two different business models, let's go over this very quickly in the sake of time. It could be a B2C consumer, which could be apps, marketplaces, platforms. When we look at teams, it should be that you are knowledge and experienced with the end consumer, and you know how to do growth activities direct to consumer. Very different from B2B, when I'll come to that later. You've maybe launched your first MVP. Metrics could be first indication of stickiness, similar to retention, and or high growth in users, so volume, one of those maybe. Commercial traction is not a requirement, neither is a proven business model. But of course, again, as I said before, the more traction you have, the better you are positioned to get investment. On the B2B side, it's about knowing how to build software solutions for corporate customers. Also, a very high degree on the commercial aspect on how you're going to sell it, being it outbound, being it inbound. Product could be a first beta. Metrics, again, illustrate, maybe it's more about illustrating your awareness because you're probably not that far yet. And again, commercial traction, there's no requirement if you want to get investment from us. A place you could also go is just Google it, but Point9, a German recognized VC, they've taken on to do these, what they call funding napkins. So depending on the stage you're at, what kind of metrics target should you succeed with? And again, here they have different funding napkins depending on your business model and product solution. A final thing here, metrics, there are many. Some of them are mentioned here. It could be customer acquisition cost, what does it take to acquire a customer, lifetime value, cohort analysis, similar to usage, revenue being at MRR, as a monthly recurring revenue, annual recurring revenue, annual contract value, and the list goes on and on. I would encourage you actually to look these terms up, and also if you try and understand the metrics, you would also get a deeper insight on what do we actually have to do to succeed with building your company. Ending up the last minute here, our investment process. So last slide. What we would like is that instead of coming to us when you're in the deep need of money, then come to us when you would like it. We would like you to come to us when you are preparing to do a startup. Not necessarily because you're in a funding mode. Come to us, build a relation, show us your plans, that you're ambitious. Then afterwards, we actually have the opportunity to see you execute. And there you maybe used to be tactical. So instead of over promising and under delivering, turn it around. Under promise, of course, still being ambitious, but then you have this chance of over delivering. And then in the end, we are very much an early stage and very active investors. We invest in between 30 and 40 new companies each year, meaning we have to move fast. So if you've done those first two steps, we are fast, then it's just as much if you're ready to close a deal fast. And that was it. So Stine, maybe over to you. I think I've spent my time here.
Thank you. Right on time, Anders. Thank you very much.
Yes, I just had to unmute myself. So yeah, I will share my screen as well. Just give me 1 second. All right. So obviously, well, thank you for having me and inviting me here. I'm happy that I can share some founder perspectives at least. So obviously, my name is Stine. I'm one of the co-founders of a company called Radiobotics, and we do several things at Radiobotics, but we actually have Anders as an investor. So I'm always very grateful for those that believes in you in an early stage. It is one of the kind of things you need to identify, is that obviously you have to live up to some of the requirements that Anders mentioned, but it's really good to have those in the first place. So also, just to give a little background of me, I've been working with startups for quite some time now. I sit on several boards at other startups. I also invest myself. I have a little company called Nordic FinTech Angels. I'm also an author of how you can experiment with technology. I also sit on the Danish Innovation Fund's investment panel. I actually hand out some of the money from the government. So I sort of have a great perspective, but I want to share more with Radiobotics today. So just go to my next slide. So obviously Radiobotics, we are a health tech company, and we try to build machine learning algorithms that can detect diseases in plain 2D x-rays. And so obviously we're doing quite complex things, and it actually takes quite some time. We have existed for more than 2.5 years, and we haven't made money yet. And I can tell you that this is what all my investors are asking for, that you need to do 3 things, and it's sales, sales, sales. And that's the only thing we haven't done. But we're still really trying to do the best we can to build a business that is both based on technology and doing a lot of things. So I've obviously also run into a couple of challenges on the way, and I have some more personal perspectives that I'd like to share with you. So first of all, you have to acknowledge in anything you do, at least as when you're building a company and building from something that didn't exist, or just an idea on a napkin, as you said, Anders, is really, you have to find institutions, you have to find corporations, you have to find a lot of different things that believes in what you do. And obviously you have to do a lot of work before you get to a stage where you can get more and you can onboard more people and things. But there are some that are focused on an early stage, and that's obviously where you have to look first. So really, I really put a lot of effort into that. You can't do this alone. And we will need to continue to surround ourselves with great people and great ideas and great companies, so to say, because we are very much dependent on it. The good news is there are a massive amount of initiatives to actually support you. And I think at least building a business in Denmark is that there are so many institutions, so many initiatives that you get lost in the number of them. But I'm also saying that no matter what, you still have to keep looking for those that might fit to your business. But I really think it's actually overcrowded in this country. But that's a good thing. So don't, but you have to persistently look into what will give, sort of make sense for you. Just to show a little bit of the stages we've been at. So obviously the questions that I get the most is, how did you start? How did you actually build this from nothing? And this came from nothing. Like, we now have machine learning algorithms that is deployed in a hospital and can detect diseases in x-rays. But that is actually a very far journey we've been on. But I mean, we founded the company, you get a CVR number. That's the first stage, right? That is the easiest thing to do. And even sometimes you can think that is difficult, but you have to get your head around that. Then you have to look into, because we wanted to make technology for the hospital, you have to reach out to the hospitals. You have to find that key opinion leader that actually also believes in technology and believes that there is an idea here that makes sense. Then you're obviously looking into your first investments. And we were very lucky to get a little bit of funding from the Innovation Fund. We also got some money from something called Data Pitch. What actually really got us to a stage is we received a grant and $60,000 from EIT Health, which is a European fund. And you write 5 pages of an application. I don't know if it's still like this today, but it felt very easy and it felt very straightforward. And that was actually where we hired our CTO. And I saw there was a question before of, how do we go about having founders no money, but they still need money to be founders? So how do you go about this? And this was really what made the deal for us. Was for these $60,000, we hired a CTO, so we could build a soft software, or we could build a product, because when then you have a product, you have something to show. And then it's a little bit more convincing that it's not just an idea, but it's actually something that works. And this is obviously where we then quickly after have the radiobotics core software. And that came quite quickly. Obviously, Mads and I and some has been helping us stitching something together so we could show it on slides. But at this point, we could actually show something. Then you were working on building a product. Meanwhile, you're also trying to see if you can raise more money, speak to more hospitals, more accelerator programs, more all of these things. So really, we have been on a journey, obviously. And then, you know, things starts to grow. You've got one fund, then you get another one, then you invite more people in, and then they speak together, and maybe they introduce you. And Anders also mentioned something about traction. And Nicolaj, you also said the word trust. And I really, really think that you have to be very, very focused on those things, both traction and trust. It comes very nicely together, because if you get some traction, that also builds the trust in some way, because you get a place where you can tell your story. There are faces put on what you do. You will have the hospitals also to speak about that there is a need for this technology. And then you are being, you know, we have been lucky to be put forward as a company that is really trying to break the ground in terms of getting access to patient data. We're also trying to see new things in terms of having these kind of technology approved in a regulatory setting. I don't want to bore you with that, but that is relatively difficult. And we're also trying to, you know, set on the agenda of, you know, female founders and other kinds of agendas. And we have a lot of discussions around what do we have opinions around. And we have opinions around healthcare technology, data, and the regulatory field. And this is really where we have gotten a lot of traction. So I would recommend that you also think of, you know, what could you have an opinion around of new things that you do and inspiring ideas that you have, because I promise you, big companies and a lot of places, they're looking for this. I sit at a tech panel and the Danish Business Association, and I sit together with all of these CEOs and group presidents of TVC and all of these big companies, and they're all thinking we need to invest more in startups, but they've never built one themselves, and they have absolutely no idea what's going on, and they're thinking all these bright minds that building companies. So you have a great place to raise your voice and show what you have of great ideas. So let me just what did I do? Did I put on a different kind of mode? Sorry. Just give me a second. I can't see half of my screen.
I think you just have to go back to the tab called Talk 22 there.
Ah, that was it. Yes, sure. I don't know how I hit that one.
Can you get it in full screen again? It's not,
yeah.
Otherwise we'll.
Is it this one?
I think.
Yeah. Sorry.
Yes, perfect.
Okay, so I have sort of some recommendations that what we have learned. So Anders, you also said it, ask for advice. It's never too early. Show them what you got, because then you can show the progression. And I really think that it's important to show the progression, both in advisors and in especially with investors, because you also want to do this progressively, because you also want to know the investors. So you don't have to think of that. You don't want to please Anders too much, because you also want to get to know him in some way, right? So I really encourage you to do as much due diligence and checking on Anders and his portfolio companies. So if you were to consider to have investment from Anders, you would ask him to say, can I please call Stine, because I know she's also working with you. And then you call me and say, do you like to work with these guys? Are they cool? Do they offer great things? And is it good time for me to onboard these kind of money at this stage? So remember, ask questions. And I've actually just accumulated some of my questions. And I know this is a busy slide and you don't have to read it, but this is the kind of feedback I would go to for VC. So I actually recently sent this email saying, can I get a CV of those people that I need to work with? So I would like to get a CV from you, Anders, in the first place, and also you, Nicolaj, if you were to invest in me. But I also would like to figure out, you know, what are the portfolio companies that you're working with? I also would like to see how you are reacting to an NDA, because then I can maybe figure out if you're talking to some of my competitors, and that I also like to know a little bit about. I also would make sure that there's no conflict of interest, so you're not at a later stage would invest in some of my competitors, and you can maybe leverage on that. So I just want to get to know, and they can sometimes say no for many reasons, and that's also okay. So it's not a deal breaker, but it's just to get a sense of how they're thinking and what they're doing. And then there's also a quite tricky question here, and it's not that you have to spend so much time on it, but it's also how they're committed to ensuring diversity. And when you're looking for soft money, meaning free money, those that you can get through the innovation funds, so those you can get through the big funds in the EU, they are very much focused on diversity. And it's not only females or what that could be, it's very diversity in its broad sense. And this is the question least VC or investors they can answer. And you can see they feel a little uncomfortable with this, but this is also a way to ensure these things. This is a way to put the question out there so they need to act on it. And then there are some technical things, is if they, for this kind of investment, if they need a board seat and all of these things. But my point is, do as much due diligence as they would do on you, because you have to find the right people to get on board. All right. Also, as I said before, there's loads of opportunities to get support. You just need to take the time to find it. And I have sort of, I get asked this a lot, and I have like this list of tons of things. And I actually brought the list here as well in my next slide. But it is really, there are great things and initiatives to be found, and there has been established many more things coming out of the whole COVID-19 thing, but also there are a great willingness to build a company in Denmark, as I would say. I'm spending quite some time in both in Europe, but also in Silicon Valley, and I can promise you that there is nothing. Maybe they have much bigger scale, and maybe they have much bigger opportunities, and you look at these massive tech companies, but you have to think of that 99% of those never make it so far anyway. The next thing is also, there is a thing with funding. So obviously the money that PreSeed represents is very much what I would call equity funding, or as you call it, Nicolaj, hard money. There is also a thing as soft funding, and at Radiobotics we've been very successful at getting both. And for me, and also building healthcare technology, it has really shown that we are validated from two different perspectives. So soft funding is the free money that we get, and they're mostly put into doing R&D and clinical trials and things. And that is really what equity funding don't really want to invest in, because they want to have sales. And you also heard Anders talking a lot about, numbers and proven traction and all of these things. The whole funds coming out of the EU, they don't ask for this as such. They're like, what is new and what is interesting here? What is the risk of actually of doing this? Because they like to support high risk projects, so they can de-risk it, so you can have more equity funding. And that's a really, really great way I see that the tax money should be spent on supporting those that are actually taking a risk and trying to do something new. And I really think there is a great validation from those, and that's really, so every time we have got a big grant from the EU, so we have lately been very fortunate to get $1.66 million from a Horizon 2020 program. And that is really a great launch pad to then do more things, look for new investments, attract new advisors and things, because it really is a great validation. And the other thing is that we were so fortunate to one of the projects that we applied for, we got the highest ranking ever. So we, in the 12-year existence of this, we got the highest score. And I must say that I have no idea how I live up to that as a startup company, but I really use this as a marketing thing, and that really resonates with when I tell my story, that they see a great potential in what we do, and we have really documented everything, and we have showed it to a peer review kind of thing. So I really think there is a lot of things to gain, and consider the soft funding part as well. This is just a list of resources. There's tons of things, and you will have this afterwards, but really trust me when I say there are many resources for you. Both Nicolaj and Anders talked about the team, and obviously a strong team that really, you can never say that it would not really work, right? But another thing I like to also say is that we are 4 co-founders at Radiobotics, and that has really, and I have never tried that before. That's my first time. And I must really say that has been helping us a lot, and we have been able to go to a stage where we have in 2.5 years raised more than $4 million. We are today 16 employees at Radiobotics, and we have come really far in a very short time. And I think it's because of the people we've surrounded ourselves with, and that we are 4 co-founders with 4 different expertises, and not the kind of co-founders that Anders he told about his student company was doing. They were all basically all doing the same. And not that I wanted to brag too much about my team, but I just want to show that that Mads, who's the CEO, he sort of has a background as a biomedical engineer, but he also has been working in a clinic in London. That was where he got the idea. He teamed up with me and Martin as well to figure out how could we do it. I have much more commercial and strategic and fundraising backgrounds, and I've also been working with other tech startups when I introduced myself. And then there's Martin, who has a PhD in machine learning and medical image analysis. And then there's also Pavel, who's the CTO, who has a hardcore expertise in building products. So we really, Mads, he runs the business. I make sure we have the money. Martin, he validates in the clinical setting, and Pavel, he builds it, right? So that is really the essence of what we're trying to do. And yeah, so obviously I don't have so much more to say. I don't know how we're doing with the time, but at least this is sort of the short way of doing it. And one thing I really want to highlight is that there are so many things in the beginning that you cannot answer, but don't worry. You just have to, just don't hesitate. You have to be confident in the unknown. So I approach all my potential advisors, investors, saying there's so many things I don't know, but I need to find the great people that can help me answer it. And most people would like your help answer the difficult questions. So thank you very much.
Thank you, Stine. If you maybe can stop the screen sharing.
That was a good idea. That will happen.
Perfect, thanks. So let's go to the Q&A. Maybe I'll start with you, Anders. I think one of the questions here is about what is the most common mistake you see? And of course, you can mention a lot. Could you name one or two that you say, oh my God, this is one of the key mistakes you see that kill basically your interest?
Yeah, it's a very good question. I think mistake-wise, there are actually, it depends of course, but I think the whole team aspect is actually, it's not a mistake, but I think there's a misperception of why you want founders and a team. It's very much down to the competencies. I also saw there was a question about cap table. Cap table is one element, team and the diversity is another. Just so that is clear. Of course, it goes hand in hand in some way, but it also goes separately. So that is one mistake. But I actually think maybe thinking about it here, you showing Stine the mail you sent to investors. Actually, I think that's maybe the biggest mistake. Actually, thinking about it, coming to my mind right now. I've only tried once that one of the investments that I was about to close, where I got a call from one of my existing founders, said, "Hey, Anders, I just got a call from this guy. It was a guy, and he says he's about to take investment from you. He wanted to hear what kind of person you are." I only tried it once. And I'm
now
glad
you try it all the time.
Exactly. I'm looking forward to it actually, because that means that I'll be building some relationships and trust. So actually, I think that's the biggest mistake, that you are not trying to understand the audience you're going to. Some people, or most teams, founders actually come to us saying, "Hey, can we get some money from you?" More or less, actually.
Yeah, I can share my own experience as a business angel. So I invest very early. I'm okay having it early, but the biggest mistake and the biggest turn off for me is I have an idea, oh my God, for an app, right? There's nothing wrong with app or consumer app, but basically there was a quote saying, building a software company, without a tech team is like starting a rock band without being able to sing or play an instrument, right? So it's coming back to the team. Of course, we all have to start somewhere, but you can't go to investors with an idea for something without the team. The team is the absolute minimum, and I had invested in teams without traction, but a solo founder with an idea without having shown the ability to recruit. Because, for instance, if you're a commercial person and then in Copenhagen or anywhere in the world want to recruit a CTO, that is not easy. So basically, your ability to do that is basically my first traction for me. Oh my God, he has convinced Anne to join his company. Maybe it's part-time, but I think that's the biggest mistake. Stine, you also sit and advise a number of companies. What would you say is the biggest mistake you see again and again?
Well, I see many mistakes. I also do mistakes myself.
Me too.
So that's the hard way of learning things, right? I see different things, but what I really think is sometimes that these great people, they hesitate. I mean, they should really have more confidence in what they do. And with that, they can leverage more, and they can, trust in, the valuation that they have. They can, be confident that the product that they have would actually work and would have a solid, fit in some areas. And sometimes they can be overconfident, but that you can quite easily see. So I really think that there should be some more confidence, and I think that I miss in some point. If that's a mistake, I don't know. Another mistake I've seen is also when you are trying to set up partnerships, closing investments round, and doing all these things. There's a big amount of legal work, and I know that there are good guys and then there are bad guys. I've seen a lot of bad things. I've seen people that want to have 25% of my company and they just put it in as a thing in the end of the contract. And I've seen some that want to invest with money that I raised myself from a public fund that they thought they could use to get shares of my company. I've seen all sorts of things. So I also think, there's a lot of things that can go wrong on an early stage because you don't know. And it's really where you need help. And unfortunately, you also sometimes have to pay for the legal work. But I really think that is one of the things where I see, at least at an early stage, you make mistakes because you're not capable of understanding and reading this. I also see really good things. And actually, Anders, I know that you're very good at taking care of these early companies and taking them through the whole process, because you educate them under the way, right? Or meanwhile you're doing this. But I really think there's a lot of things that can go wrong there as well.
So Anders, I think one of the questions here is very valid. That is about, we all talk about the team. You need money to pay the team. Stine talked a little bit about soft funding to get started because you don't have any money to pay salaries. Any other good advice for how you get started, how to come to a point where people like you or me could be interested in investing?
Yeah, also not an easy question to answer, but I think in general, let's just be clear here also that doing startups are not for everyone. I think it's very tough, right? I've only started a very, very small startup. There was nothing compared to you, Nicolaj, and you, Stine. But knowing from the startups that I look at, it's not easy. It does take some hard decisions on what you prioritize and what not. And doing a startup is not the same as prioritizing having a high paycheck, for sure. And that's what you need to look for in people. You need to find those people that believe in you, that believe in the vision and the thing you want to conquer and challenge. If you get those people on board without focusing on salary and compensation, then you're also more sure that you have people that believe in what you believe in and not just in the sake of joining a startup because it's hip and trendy and because they can get some warrants and that can explode and then they're millionaires over the night. So it's not easy, but find those people that believe in you and what you want to accomplish. And then it's a matter of co-founders in the beginning. And if you're a co-founder company, you join the startup because you get an incentive, not because you need a high paycheck. And that will everything else mean that you can work and put a lot of resources in time-wise before you need to take in funding, and hence you can show traction. But in the beginning, you will not have money to pay salaries. Of course, then Stine can, of course, with all her advice, talk about soft funding and all those opportunities. But that's where you should go if you need. If you only want to do a startup, if you can get paid salary for you or your team members.
Yeah. I can second that. And for me, one of the first, you can say, traction marks for me would be that they believe so much in the idea that they're taking risk, right? And it is a risk to go out and be a co-founder of a startup. And for me, that's a big sign. There's a big difference for me as a business angel in two different cases. One case could be we are two persons. After we get funding, we'll jump up out of a corporate job. That's one situation. And the other people I met, hey, we had these two great jobs. We're now quitting them, and we've already done that to work full time. Would you meet us? I'd rather meet these guys than these two. There is a next question about a solo founder. I will give my view quickly and then lead it to Stine. I would say if you're a solo founder, the chance, in my view, that you get funding is only 10% compared to if you're a team. For all these reasons we talked about. And then maybe you say, I'm the solo founder, but I have these 2 or 3 other persons. And then we ask you, are they shareholders? And you said no. And then there's something wrong, because either you don't want to share the cap table with them, there's something wrong, or you don't believe that they are smart enough, it's wrong. You know, it's really hard. Stine, you created your company with 3 co-founders. Would you do that again? I think you touched a little bit about that. And what would you say to a person who say, I'm a solo founder?
Well, I think I said a couple of times, you cannot do this on your own. I mean, you can be a solo founder in some sense, but then you need to be very experienced in many areas. And I feel like you would have to have worked in M&A and in venture capital and IT and all of these things. So you have to be like, have superpowers in some way. And I don't think that exists. A good thing I think of being 4 co-founders is also you share the engagement, because sometimes you're not really loving being in a startup because as you said, Anders, it's not beautiful all the time. And then it's really great to have somebody you can share the responsibility with and the energy and the help and the support, because I really think when we are coming together as 4 founders, we're doing great things. I mean, we have think of, you can pull the mind of 4 people that has done things before is to me something that is much greater if I would do it myself. That's one thing. The other thing is also that you have a lot of tasks that you need to delegate, right? And you can come much further. So I think that there is a saying thing, if you want to go fast, you go alone. If you want to go far, you go with others, right? And I really think this is the thing, that going by yourself, you can go fast because nobody has to deal with whatever you do. And then another thing is also going outside of Scandinavia. So going to the US, I spent quite some time in Silicon Valley. Co-founders and founders are superstars in the US. And you actually would like to have more co-founders or founders, because then you can divide and conquer. And then you can, so I'm spending quite some time in the US now, trying to establish robotics there. And then the others can be at home and also be founders and superstars, right? So, I mean, you can really do a lot of things with having more people and share the energy and the ups and downs. So I can't see why, and I would do it again if I could find the diversity in the qualifications.
Cool. Anders, there's a question here about how to get in touch. So is there any specific ways that people should contact PreSeed Ventures if they are thinking they have a case of interest for you? What is the advice on how to get in contact?
Yeah. There are a lot of channels. Actually, we both have a website, so you can send you a pitch deck if you have that. But actually, the best way is give us a call. Our numbers and emails, so our contact information is actually listed on our website. And I think if I get a call, I'll pick it up, and then you have me in the phone, and then you can say, "Hey, I'm this person, and I have this idea. Would you take me 5 minutes to talk about it?" I'll always say yes, and I'll most likely always say yes to receive. I actually think always say yes to receive a pitch deck, unless of course somebody calls me and asks, "Do you invest in biotech?" And then I can say, "No, we don't invest in biotech," and then I'll waste your time on seeing your pitch deck. But if it's just relevant for us, I will always take the phone. I will always like to see and be in a dialogue. So I think that's the easiest way. So don't be, and it's just like you say, Stine, use the advices, reach out. Actually, you will feel and experience that all people in this ecosystem, being it investors, mentors, or what be it, they are actually more than willing to share experiences and help you on the way. So you should do it more than you think.
Yes. And I can also share my insight here. I second what Anders said, but I also think you should not underestimate the value of recommendations or introductions. So again, as I said, early stage funding is local, and a fund like Anders will get several hundreds of requests a year. A business angel like me would also get a few hundred. How do we make sure that I really spend time on something? And the best way is when it comes from a trusted contact who says, "Hey, Nicolaj, here is a contact of mine. I think they fit what you are doing. They are local. They are in the B2B SaaS, whatever. Hereby introduced." Again, I also look at any other cold calls, but just doing with an introduction also says something about that they're giving some effort and they want to talk to me for a specific thing, and it's just an email sent out to 200. So Anders, I will kick it back to you because you mentioned a little bit about team, and I think this question was answered before you got into the detail. You mentioned a little bit about what the team you like to B2B versus B2C. Maybe I should rephrase the question a little bit. What do you do when you see 1/3 of the team or 2/3 of the team? Because you mentioned, what the perfect team. Are you going to work with the partial team, or how do you see that? Because I guess that must be the situation in most cases. It's not really bad and it's not really fantastic. It's something in the middle. How do you handle that?
Exactly. And just to be clear, we don't expect to see a full executive suite of competencies when we invest. We can simply not demand that or expect that. So of course, typically we see 2 to 3 founders or founders / co-founders. And actually on board in PreSeed Ventures, we have a person who is a talent director of title, and his sole responsibility is actually to work with teams. So not only do we focus on teams, we actually try and help the companies we work with succeed in establishing the best team, be it in the core team or in the board. If you don't have, let's say you come to us and say, well, we are a CTO technical person and we are product guy or woman. But in this investment that we're asking from you, we'll also need to ensure that we succeed commercially. Okay, then you can say commercially, but you're not commercial or what? And then you'll say, honestly say, no, we don't have that experience. So you'll need a commercial person. Well, then it's a matter of asking you, what does your hiring plan look like? So think about what competencies do we have today? What are the must-wins you need to accomplish to succeed, to reach your targets? And if you don't have the competencies on board, you need to fill out that gap with some hires. When you raise money, much of that money will go to hirings. That's a classic thing. When you see startups raise money being in pre-seed, seed, A, B, C, D, a lot of those money will suddenly go to hiring people. So a hiring plan can always be a good way to start, also to show investors, we might not have a complete team, but we acknowledge it and we want to do something about it.
Thanks. Stine, here's a question I think you are perfect to answer. That's about assumptions. So how did you test? Could you elaborate a little bit of what you did? I guess you started, oh my God, we had a big problem to solve. Fantastic. What did you do in the first month, whatever? How did you test your assumptions?
Well, I mean, first of all, I have one investor, and it's not you, Anders. He says you should always exaggerate with 25%. So that's sort of where you start, right? You're always a little bit further than you actually are. So you really try to reach out. And as I said, we were focusing on reaching out to the hospitals because this was where we were supposed to have validation from. Like, would they need this? How would it look like? What would they need? So for us, the testing was very much to hospitals, and they can be a little difficult to reach out to. But again, you also need to have a network. And then Mads, who is the CEO and also who got the idea of radiobotics, he already had a good network. And I also think that if you get an idea, it comes out of from where you worked, from things you've done, and you probably already have a network there. So it's really good to get validation from the things in the near environment, so to say. So I really think that's a way to do it. But it's also, again, as I said, being confident in the things that you don't know, because then it's also you validate through saying, I need to have people that can help you with this, and that's what you say, Anders, in terms of competences. So right now, when I'm looking at investors, I'm looking at investors with 2 competences that I need to sit around the table. It's technical competences and clinical competences, because I can see that is really what I need to leverage the company. And you can have that. You don't only need to hire them, but you can also have them as advisors or in your board. So it's also, again, and that gives more validation. So I'm also an advisor, and they use me as an advisor both for my name. So that is a validation through what I have done before, and that's relatively easy. And there's not much obligation with that anyway. And then you have more people around you that is also validating. So having great investors that is maybe known in the field is also a validation, right? So you can get it from many areas. And then again, I said, traction is also validation. So it comes in many formats, so to say.
Yes. We're basically out of time, but given the amount of questions, I don't think we can get through them all. What I propose is we basically spend 5 minutes more on answering some of those questions. Yep. And then for those of you who have to leave now, you can get the recording afterwards, but let's spend a few minutes and let's try to do a Q&A relatively fast. Anders, do you only invest in Denmark or also outside Denmark?
Only Denmark.
Only sure. Denmark. Cool. Also very relevant question, Stine. You get this big public fund grant from EU. Did you write the application yourself, or did you hire a consultant to do that?
So there is something very magical in this country, and that is there are 2 countries in the entire world where the government pays you to actually
That's true.
apply for money. And I mean, where does this exist, right? So you can get up to 50,000 Danish kroner to make an application. And I mean, it's ridiculous. And it's great, and it's easy to apply for. I put a link in my slides to that.
It's called EU Upstart.
Yes, exactly. And we applied for that. So you get 50,000 kroner in your hand. And what we did was we hired an agency for this. I mean, we were also busy doing many more things, and obviously they take a success fee, or they take some of a part of it, and they obviously need some of the money from it. So that is obviously, they do a great amount of work. But I really find that if you find a great agency, and there's tons of those, that can actually help you with this, because they know there's a lot of documentation that needs to be exactly as the Horizon 2020 program requires. So, and I don't really have time for that. So I really used a lot of agencies to help me with it. I also know some, they do it themselves, but I mean, like the big one we just got, I mean, we failed 3 times. We got rejected 3 times before we got it. And so you didn't apply again, and they help you with those things. So I really mean, they're a great resource, and they do a great amount of work. So I'm also happy to pay a part of that to them as well. And they know what it takes, right? And so I would recommend it. You can also find people say you should do it yourself. We're very busy doing other things, so I think it's a great add-on, and it is, by the end of the day, free money. So I can spare a little bit of those, sharing it with some others. I
second that. I've written on myself, hard work, and we've just basically this week hired an agreement with a consultant. Anders, a question for you. Does it have to be a $1 billion opportunity for you to be realistic? So, you know, we all know that VCs like you go for something that can become big. How big does it need to be interesting for you?
But there's no secret that our strategy is to hit what you would call those. Our math is built up on that we hit those unicorns. So in American terminology, that's $1 billion, but of course you never know. And I think also looking at it from when you show the classic market analysis, you know, what's the total market, what's addressable, and what can you obtain as a company. Please distinguish between also the initial size of that market, but also how it's growing. Maybe the market that you are pursuing is not that big today to showcase a unicorn business. But on the other hand, if you look into the growth potential in that market or associated markets where you with advantage could pivot into, then you might be able to show it anyway. So instead of being limited on immediately a limited market, then try and see if, even though that you could actually showcase a huge potential market. I think it's very easy to do so in every case, actually. But of course, we as investors, we are very much focused on the unicorn-alike potential. Yeah.
Then there's a question regarding B2B and B2C. Well, it's a difference. I can now share my insights here. I mainly invest in B2B. That's simply what I feel most confident about. I'm also investing in some B2C, but that's more optimistic. Why do I like B2B? Because for me to validate these assumptions is easier for me. If people come to me and said, Nicolaj, this kind of industry needs this kind of software, I can call 5 people and I can basically try to understand do they have this need. If you should pitch to me what will be the next fashion designer or will be the next consumer game or whatever, I'm similar skilled. So you can typically see that the one who have done something successful in B2C, of course, are confident in that, are doing that as an angel. I've been mostly successful in B2B. That's what I mainly do. And you can also see that venture funds typically structure it out. So they have some partners who are mainly focusing on the B2B and some on the B2C, because it's 2 different things they look at. Anders, maybe you can share your comments on that. And also there's a question here. Why did you invest in radiobotics?
That's obvious, but let's start with the other question first. So again, we are a very active investor. We invest in at least around 30 new companies each year, meaning we cannot simply say we will do only B2B within fintech. So we are broad. We both invest in B2C and B2B. That being said, if you look over our portfolio, I think most of them, it's a higher share that are B2B. Denmark simply also is known for doing B2B businesses. So we have a more nature of building those kind of companies in out of Denmark. But we do both, and I totally reckon what Nicolaj says. It's two very different skill sets. And actually also within B2B, if you do inbound sales or you do outbound, that also completely different models. So one case is rarely the same. So it requires some resources, but we're also 5 people in PreSeed Ventures who do investments and work with that. So yeah. And then the most important question that was why did we invest in robotics?
Oh, yeah.
I think it's obvious, the team. It was a driven team. It had energy. It had a diverse skill set, both competency-wise, but also you can say gender-wise is also very important, and function-wise. So I think it had it all and still has today. And I think with the traction they are on, building the team and scaling that, it's for us, we're just very happy to be on board together with the other investors. So easy question.
Thank you.
The next is about NDAs. And instead of Anders, who just mentioned that, I will go to Stine because she's the one who said, as it's an NDA. You know, Stine, I would say that, did you have a problem in doing that? Because for me as a business angel, I only sign NDAs when I'm relatively far. I don't sign it on the first email. So can you elaborate a little bit whether you have problem having investors sign NDAs and how far in the process was that?
Yes. So if I would ask you about if you do sign NDAs, you would then get back to me and say, yes, you would, but you have to come a little bit further in the process where you would do it. But then again, it's also just for me to say that you should ask these questions up front in terms of that, you know, where we're going. Do you take this seriously? And as Anna said, he would love to have more questions like this. So it's also, again, to consider it. But I actually had some that I asked and they said clearly, we don't ever do this. And that is to me something that shows something where we were actually a little bit in doubt whether we wanted to continue the discussion, because I have quite confidential things that I share in my pitches and that could be of great interest from other competitors. And I know that those investors can also be talking to these and they're very welcome to do so. But for me, I would also be a little bit more suspicious saying they're probably in further dialogues with some of my competitors then, because then they wouldn't sign it. These are only assumptions, but you have to have a sensation and feeling of these things. And for me, posing the question is the first step towards it, right? So it doesn't have to be a deal breaker. It just, to me, shows what you're dealing with and what they think. And I think that as a one seeking for money, you also have, you know, a good opportunity to show that you know what you're doing and you can do business.
Thanks. I think we have time for 2 more questions, so it'll be very fast answers. Anders, is there a max on the valuation for pre-revenue startups? Is there simply something you can say, you know?
Yeah, so pre-revenue startups, and I would say it's very broad, because if you include biotech and stuff, it can be a huge amount of valuation. But if we just stick to tech startups within software and not a too regulated space, then yes, there is. But you should maybe also turn the question around: what traction do you have to support the valuation you would like? Because I know the question also comes from, you know, what kind of dilution will you have? But we actually did analysis 3 years ago. We took the 3, I think it was 3 investment from a number of, I think it was 5 or 6 institutional investors in Denmark. And then we mapped those 3 companies and what the initial investment had been. You could find that public information. And the valuation and that initial ticket size was between 5 and 20 million DKK of valuation pre-money. So somewhere in between that, I guess.
And I can share the same. It's about storytelling. I once invested in a company where I think we had the strongest team I've ever seen. And the founder was so good. So basically the valuation I paid there was at least 2 or 3 times higher than I normally did. Why? Because the traction that he has shown was to generate the most amazing team. Final question here. There's a team from Ukraine who said that they have whatever it takes there. Would it be interesting for me or for us? I can say no. I would not invest in a country where I can't validate the team. If it was a friend of a friend, then maybe. But for me, it has to be either local or people I know. Anders?
Yeah, I can reckon that, and we actually from time to time get questions about whether if you then move to Denmark, will we then invest? Then I today answer straight away that that might be, but you have to move here for business purposes first, and then we can take a dialogue, because I don't want you to move here and then I've said something about I want to invest. So, yeah.
Cool. with these questions, and sorry, we can't take them all, but we're already 11 minutes over time. I'll just share my screen for basically 10 seconds. And I will say, if I could do this, I would say, thank you first of all to Stine and Anders for participating here, and to all of you for joining. What we're having basically every month is what we call open door, where you can get feedback. It's not a pitch event, it's not pitching for money. It's basically half an hour with either an investment manager from PreSeed or myself to get feedback. And it's really, really interesting. I like it a lot. And now we have summer break, but the next event we have is August 12th. So if you're interested in getting feedback on your idea, this will most likely be virtual. Then apply at PreSeed Academy. We will also be back with more PreSeed talks like this in August or September. We haven't set the date yet, but we'll get back to you very soon. And as always, this has been recorded. So you'll receive an email with a link to recording afterwards. So thanks to all of you who stayed that long, and have a nice summer.